Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news in the growing shadow of upcoming central bank decisions. Financial markets are having a roughish time reading the tea leaves on what the US Fed will do at this week's meeting. The PCE result for June left open every interpretation, and the prior presumption of a September rate cut is in question. Will it give the Fed members enough confidence to hold off until after the election in November, their usual non-change stance around elections, or will they still feel they need to go now to prevent a monetary policy mistake? And then there are even bigger questions about what the Bank of Japan will do this week. They have now got the moderate inflation they've been seeking for decades, but seem uncomfortable with the consequences. Meanwhile, manufacturing in the US oil patch is going backwards. The last time it was positive was April 2022. Since then, it's been steadily contracting, according to the Dallas Fed's factory survey. Another corner of the US economy that isn't doing great is commercial real estate. According to MSCI, lenders foreclosed on more than $20 billion of loans in this sector in the second quarter of 2024, a 13% jump from the first quarter and the most in any quarter in almost a decade. Across the Pacific, positives are much easier to find in Taiwan, where consumer sentiment rose in July to its best result in 3 years. It was sentiment driven by significantly improved family financial situations, employment prospects, and general feelings of prosperity. In contrast, we should note that there's still no sign of China's June foreign direct investment report. This might be part of a wider pattern to keep tough news from markets to prevent them from overreacting. And their weak equity markets have many piling into Chinese government bonds, pushing prices up to record levels and yields down to record levels in a sharp risk aversion mood. Some analysts expect Beijing to intervene by borrowing and selling bonds to reverse the moves. It's a bond bubble built out of fears for China's immediate economic prospects. The US Treasury 10-year yield is now just on 4.17% and down 3 basis points from yesterday. The China's 10-year bond rate is now just under 2.14% and a very sharp 6 basis points lower and easily a record low. And the price of gold will start today with a small $8 move down at $2,378 an ounce. And oil prices are another 50 US cents softer at just on $77.50 a barrel in the US, while the international Brent price is just under $79 a barrel. And the Kiwi dollar starts today marginally softer again at just under 58.8 US cents. Against the Aussie, we're also marginally softer at 89.8 Australian cents. Against the euro, a little change to 54.3 euro cents. That all means our trade-weighted index starts today at 67.8 and down another 10 basis points from yesterday. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.